banks will always exist for as long as we have the system, the economic system, based on fiat money. And what we have done is we've been very innovative and at the forefront of many new movements. So we have brought hedge funds to clients, we've democratized private equity, but we're also the first ones to bring to the private clients an institutional approach on how to manage their money. I think if you have the right culture in a business, no matter what the culture is, some people might like it, and some people might not like it. It might suit some people, or it might not suit some people. But if you have a very strong culture in a business, that is really what drives the business.
For Swiss listeners, my guest today needs no introduction. Bank Syz is the founder and chairman of Syz Group. Eric is an exceptional entrepreneur and famous for bringing alternative investments to Swiss investors in the early 90s. Syz is a 250-year-old Swiss textile family that founded some foundational Swiss companies like Credit Suisse and Zurich Insurance. Today, our chat focuses on entrepreneurialism and how a founder should navigate today's challenging environment. Eric, thanks for being here. It's great to have you on the podcast today. I'm very honored.
Well, Rich, it's a pleasure to be here. Thank you.
So let's start from the top. I mean, look, the Syz family has this very rich history of entrepreneurialism, including the founding of Credit Suisse and Zurich Life. Was founding your own business something that you always wanted to do?
Well, yes. Well, as a very young man, I did my first stage at the Swiss bank, Hoguet Zeller Bank. And of course, it was all about finance. And I got fascinating with investments. And I like the stock markets and the idea to be able to invest in stocks and see companies grow. And so, yes, at a very young age, I thought, well, it would be a nice thing one day to be able to lead an institutional business like the private bank that I worked for at the time.
Indeed. And you went on to found Bank Syz in 1996, which obviously was a bit of a tumultuous time, particularly in the Asian markets, quickly followed by the Asian financial crisis. What would you say were the biggest challenges with, first of all, founding a business, but also particularly the business that you were in? Were there any specific challenges that you faced and iterated through?
Well, starting a business is always a big leap of faith. And you got to, not be afraid to jump into the cold water. And I think what a lot of people do is when they jump, they keep on their clothes, and then once they're in the water, they understand that they should get rid of those clothes because they don't keep you warm. They're just more hindering you. So yeah, it takes that leap of faith. And then once you decide to start your business, then it's a lot about trial and error, right? And it's a lot about how do I control my costs and, how do I make this the most efficient? And of course, at the beginning, it was like a sort of a garage operation. I remember when we were programming, we were in a room of 25 people all jammed on top of each other. And the first thing we had to do is to find out where we could buy as cheap as possible PCs. And in Switzerland, they were just too expensive. So we went to America and bought some PCs, which at the time were the most powerful PCs you could get from Micron. And but we could not wire transfer them the money, so we had to buy them on our credit card. I remember it was about $30,000 on the credit card. Of course, my credit card didn't support that, so we had to get an exemption. So yeah, that's how you start a business.
Yeah, lots of these types of stories. You were famously one of the first people to bring hedge funds and more broadly alternatives to the Swiss market. What particularly inspired that approach for you, and how was it received by the client base?
Well, when I was working in New York for a firm called Payne Weber at the time, we were all paid, I was a stockbroker, we were all paid on commission. And so my American colleagues, because I was looking after the international markets, they were making all these volumes with hedge funds. And at the time, this is in the early 80s, I had no clue what a hedge fund was. And so I thought, well, maybe I can get some clients which are called hedge funds. And before long, to figure out what a hedge fund was, I sat in the office of George Soros to figure out what a hedge fund was. And from there on, I understood what they were doing and that they were really funds which could produce very high performance. Although we have to remember it was also a time where interest rates were, in double-digit teens, and so that certainly helped. But that was certainly my first contact with hedge funds. And then when I came back to Switzerland, I started to invest myself in hedge funds, and then for our clients. And our clients could see this idea and understand the idea of investing in something where the manager was looking at total return rather than at relative performance. And really the objective was, which still is today, is let's not lose money and let's make as much money as we can. Which is really what private clients, in their back of their head, that's what they have, in their mind when they, invest their own money.
Did you find that you got hit with a bit of flack bringing these things that were not necessarily trusted in the financial community at that point in time?
Yeah, I mean, some people were very wary. Some people didn't know about it. And there were very few people in Switzerland, with a few exceptions, a handful of people who knew about these funds, who were familiar with those funds. And certainly the bank, which was a large private bank where I worked at the time, this was something very new and unheard of. And of course, there was a lot of question marks around it. But it didn't take a long time for them to understand that actually these hedge fund managers were producing very good returns, and the clients actually quite liked the idea.
Yeah, I draw the parallel to crypto today. We obviously, Syz Bank has been one of the first banks in Switzerland to start offering crypto custody to its client in that continuous, innovative process. And, the issues that you may have gone through there, were there any particular stumbling blocks as you addressed that with crypto that were sort of reminiscent of your experience with hedge funds?
Well, I think it is very, it's very, very similar. Although it's hedge funds were really a way to manage traditional assets like stocks, bonds, and cash, which most of the people were very familiar with. Where with crypto, people are much less familiar, makes it more complex. It's more difficult to understand how it really works. You have the issues with keys, which for many people is an enigma. So I think it's a little different, but at the base is probably very, very, very similar.
So just continuing in that vein, there's been a lot of noise, obviously, about the Bitcoin ETF and everything that's been happening in the US. I think GBTC has now passed, IBIT, the BlackRock ETF, has now passed the original product in the market, GBTC, in terms of assets. How do you think about Bitcoin specifically for the firm, the family, as an investment? Do you have a view there?
Well, look, we don't know where Bitcoin is going to go. And so it might become really a major factor in the economy or not. We frankly don't know. We don't know how these things are going to evolve. What we do know is that if you do believe that there's going to be debasement of currencies in general, and if you think that the governments are the only ones who can be short inflation, and if you lend money to the government, after 30 years, what you get back in nominal on face value is the same, but in real terms, it's probably worth much, much less. And so if you take, for 30 years, 3% inflation, probably you get, a very small fraction back in real value of what you lent to the government. And so there is an argument to be held to really hold, Bitcoin in your portfolio, because there's a finite number of Bitcoins. And so that is probably, from that perspective, you could look at it as the real assets. This is why people have always said, in inflationary periods, you want to really hold on to real assets. And that has been in the past real estate, that has been, companies like equities. And so you certainly don't keep your wealth by, holding on to fixed income.
That's true. Your friend Paul Tudor Jones recently famously said that he views Bitcoin as being the fastest horse in an inflationary environment. And so, have you ever spoken to Paul about his views on Bitcoin?
No, I know Paul. I've known Paul from almost the first day he started trading, and we became good friends over the years. But I haven't really exchanged with him on his views on Bitcoin. And but I would tend to agree with him. For the time being, it looks like Bitcoin is the new game in town. But as these things are, things evolve over time, and so there's many things that could happen, over the next, decades on Bitcoin. But for the time being, yes, I think that everybody should have a part of their wealth in Bitcoin and see how it evolves.
So going back to yourself as an entrepreneur and sort of thinking about the battles that you faced, what would be the key advice that you would give to a 20-year-old Eric Syz, or even a 20-year-old coming into the market today?
Well, I think when you start your own enterprise, you got to be courageous and you cannot be afraid. Mm-hmm. You just got to take the bulls by the horn. You will make mistakes and you have to accept to make mistakes, but you learn from your mistakes. And so don't be afraid to make mistakes. Don't do them for too long, because that's going to be potentially very costly and can break mm-hmm. you. I think the other thing that a lot of people, when they're entrepreneurs, sometimes forget is that there are a lot of people out there in the market that can give you advice and that are more than willing to give you advice. Mm-hmm. And I always keep saying to young entrepreneurs, but also to, even if you do just a plain vanilla investment, look at your investment or look at what you're trying to achieve from different angles. And when you come from one angle, it's very hard mm-hmm. to change to a different angle. And I compare it to a football field. Mm-hmm. If you look at a football match, from one side of the arena, it looks very different than if you go to the other three sides. And even though it's the same game, if you go to all the four sides and look at the game from all the four sides, you will discover and you will see things very differently. And that is what you should do when you are building a business, mm-hmm. when you look at an investment. Talk to other people and don't be afraid to talk to people who you probably know they're going to give you an answer you don't like to hear. Mm-hmm. This might just be that kind of input mm-hmm. that's going to really make you reflect and really think of what you should be doing or not be doing.
Seek out the skeptic.
Absolutely.
Yeah. No, I like it. I think, we chatted a little bit at the beginning about how fast technology is moving today. And so with the sort of the viewpoint of AI and, all the different things that are happening, you mentioned debasement of currency, it feels like that's happening faster and faster. If you're giving advice to an entrepreneur today, or even if you yourself were starting today, what different considerations would you have and how would you probably be thinking about these various different aspects?
Look, I think the world has always been changing. Mm-hmm. The question is at which pace it is changing.
Yeah.
And it is true that, if you go back 100 years, there were huge jumps, mm-hmm. but it happened in a much slower space. And people could adapt probably easier and more comfortably. Today, things go extremely fast.
Yeah.
But having said that, human beings are very adaptive and extremely resilient. Mm. So what is very normal to a 20-year-old one today who has grown up in a very fast-moving world and has the capacity to adapt extremely fast might not be that easy for a 75-year-old. And so I think that, it is usually young people who are entrepreneurs who undertake. So I think my advice is, adapt fast. Don't camp on some positions where you think you're right and everybody else is wrong. Mm. Try to reflect on what works, but also on what doesn't work, and take into consideration what is happening around you, but also make sure that you don't give in to every fad and to every movement that is happening, because that can be a very treacherous path.
Yeah, I think always the temptation of an entrepreneur is to do everything that offers an opportunity rather than potentially stay focused on a singular objective. And this was advice that you have given us in the way that we build Syz Capital. And so I think, do you have a view on focus that you'd like to share?
Well, look, I think you're absolutely right. When you're an entrepreneur, you're enthusiastic, you want to do business, you need to have revenues, you need to go out there, you need to make clients. So, of course, the temptation is huge to give in and to do everything, but you get very quickly tangled up in a lot of different issues. And at the end, it is really the focus that makes a difference. When we started out the business at Bank Syz, for instance, we said, look, we're going to focus on just managing people's assets. We're going to have 3 different risk profiles, medium, high, low, 3 different currencies, Swiss francs, dollars, and Deutschmark. There was no euro at the time. And we said to our clients, look, this is what we do. We don't do anything else. We don't do any lending. We don't do any, we're not here to transfer and wire transfer your money. We have no corporate accounts. We don't give you advice on shares. We don't take deposits. We just focus on one thing. And I think that was certainly part of our success because the temptation was huge to do a lot of other things. As you evolve over time, of course, we started to become a full-fledged bank. But it took us probably 10 or 15 years to get there. So it is, you can always venture out in doing more things, but start with one thing, get it up and running, make it profitable. And as the cash flow comes in and as you get these profits, you reinvest that profit into, more legs of your business.
Yeah. On that subject, as you think about the world today and, obviously you're running you're overseeing a much more mature organization than you were back then. You're now the chairman of the group, so you have a CEO of the bank and CEO of the various different other businesses, CEO of asset management, CEO of Syz Capital. Where are you driving particularly within the bank to be changing and evolving in the current environment?
The banks will always exist for as long as we have the system, the economic system based on fiat money, where you lend money to build a business and we have a piece of paper that trades between people, you will need to have banks. Our capital system works with equities and lending, and so that money has to be invested in one way or another. And so typically the private banks, they are really wealth managers with a banking license, so they can also do some banking services. But private banks are really wealth managers for high net worth individuals to preserve and make their capital grow. And so what we need to do as private bankers, we need just to adapt to the markets, to our surroundings. If I go back 30 years when we started off, yes, we were maybe pioneers in hedge funds, and we may be among the first ones to democratize private equity. But if I look in the early 80s or late 70s, when I was in New York, you couldn't trade an index. There was no tradable index. And the first tradable index was listed on the Kansas Stock Exchange, where they would trade, commodities, wheat, stock, orange juice, and it was on the Wilshire 5000. And that is, I don't even know if there's an index on the Wilshire 5000 anymore. And it's certainly not trading to Kansas City. So you have to adapt to that, and then, eventually you had more indices, and then you had to start to have options, and so you need to adapt. You cannot, it's a business like any business, but maybe the financial market is a business where, the pace and the rate of change is probably, as fast as you can wish for. And so you need to be able to adapt. This is why, for instance, people like us, we've opened up to the idea of Bitcoin and some other of these coins to say our clients, if they want to invest in that, we have to be able to offer them the opportunity to do it. So you've got to be adaptive.
Yeah, indeed. One of the things that you did this year, which I thought was a phenomenal initiation, was the tokenization of a piece of art. Do you want to maybe just talk a little bit about that project and how it unfolded?
Well, look, one of the questions you can ask yourself is, what does tokenization do and what does blockchain do? And so it can do a lot of things, but actually it is really what the blockchain technology does and what tokenization does. You can actually dematerialize a fixed asset and you can trade it. You can trade it en bloc with just one token for one asset, or you can split up that one asset in many tokens. And so the question that we ask ourselves, because the art market is a very buoyant market, and the market where there's a lot of volume, more than people think. I mean, it trades billions, hundreds of billions every year. So it's a very large market. But of course, it is quite illiquid because it trades in bulk. It trades piece by piece. And so our question was, well, maybe there is a desire from the market to be able to dematerialize a piece of art, cut it up in a lot of tokens, and then see if there's a market for it. So that was really the idea, to put our foot into the water, take the temperature, and see how that works. It also forced us to not only better understand what tokenization means, but also to see where are those markets, where are those opportunities.
And for listeners who haven't yet visited it, the Geneva office, or the headquarters for Bank Syz, is basically an enormous art gallery, isn't it? Do you enjoy walking clients around the building?
Yeah, but that was just a pure coincidence. I mean, we didn't look for a building to put in an art gallery. We were looking for a new building because we would just outgrow the old space where we started off, which was in one of the main streets in Geneva. And on one of the side streets, we found this building which suited our needs. And then as we transformed the building, we happened to see that this space would be great to also have our art collection in there. We had it already before, but in a more traditional building. And this building was just better suited to show it the way we show it today.
Yeah, phenomenal space. So as we sort of think about the future, and you've obviously recently stepped back to chairman of the overall group, as you think now, as you project into the future, about what you would like the legacy of the bank to be and the way that you'd like to see it evolve for both its employees and its clients, do you have any specific focus?
Well, look, I think if you think, what is it that we do? We're here for our clients to make sure that our clients, and no matter if they're institutional clients or if they're private clients, to preserve and grow their wealth. And what we have done is we've been very innovative and at the forefront of many new movements. So we have brought hedge funds to clients, we've democratized private equity, but we're also the first ones to bring to the private clients an institutional approach on how to manage their money. Because managing money at the end of the day, or managing wealth, is all about a process which is repeatable. And but of course, in the service business, we have no machines. We have no research and development. We have no fixed assets. Our only fixed assets are computer screens and maybe a building. So our whole capital comes in the morning and leaves at night, which is our people. And every business is dependent on their people. But in the financial industry, it is entirely and exclusively dependent on people. And so the legacy that I would really like to leave is that we have a culture and create a culture that attracts the kind of people that we want to work for us and deliver the services to our client which they need. And if we're doing a good job at that, I would like that we have enough people queuing in front of our doors who want to work for us so that the business can continue to grow. And so if you need to hire somebody, you actually don't need to go to a headhunter and wait for 18 months to find the right person. But then within a very short period of time, you have already 3 or 4 guys who will be knocking at your doors who actually want to work for you. And I think that is really the legacy that any business should want to have, which is, in our industry, in the financial industry.
I think not just saying it because you're sat here, but I think you've done a very good job of creating a family feel to the organization. And I think you've really embedded in both Nick and Mark, your sons, this mindset of hiring the best people and creating a culture of feedback and passion about it so that you can indeed hire the best people. I think, we find it all the time. We actually get often approached by our clients and say, look, I'd really love to just come and work for Syz Capital. I love everything that you guys do. So I think you're on the right path for sure with what you're doing. Fantastic. So final question always I like to ask guests on the show, Eric, is given some of the topics that we've covered, some of the challenging concepts that are going on in the world today, how do you think about allocating a portfolio, particularly when you think about alternatives? I know you chair a large foundation here in Switzerland, thinking of maybe if you could talk a little bit about the way that you have built that over the years, and then looking at where you specifically would be allocating capital today in today's environment.
I think it's a very good question. And I think what people very often underestimate is that the success of allocating capital is not so much where you allocate it. It's much more that you have a strategy and that you stick to a strategy. And there is no strategy which is the right strategy or the absolute, ultimate strategy. There's only a strategy that fits the purpose of the people who are the beneficiary of that specific endowment, portfolio, liquid wealth, or whatever it is. And you got to figure out what that strategy is, what you want to achieve, and then you got actually to stick to it. You can tactically overinvest slightly, a few percentage, or underinvest a few percentages in the specific different buckets. But that is the key. Most people, what they do is they keep on changing their strategic asset allocation. So they run off the markets when they're high. They go out of the markets when they're low. They go into fads. When everybody wants private equity, they want private equity. When nobody wants private equity, they all want out. That is not a way to successfully manage a portfolio. Yeah. And so on this particular foundation that I chair, we have decided on a specific asset allocation. At the time, it was mainly equity-based. The idea was that we said we needed some income, so we had to allocate some bonds, although the donor did not believe at all in bonds, because he thought the bonds over time would lose money and certainly would not hold up to inflation. So he was an industrialist and said, I want to invest in real assets, which is equities, but we needed income so that income could actually pay for the charitable deeds that the foundation was set up to. And but the success of the foundation is it has multiplied many times over in the last 40 years. It almost 20-folded. Wow. But we stuck to the strategy. We stuck to this equity strategy, and we just, kept on putting in more money into the equities when we were losing money on the equity side, and take some money off the table when we were above the strategic asset allocation. So if I, go now fast forward in today, how do you have, what's your kind of allocation that you want to have? Certainly, what was true 40 years ago is true today. You want to have a very high part of your portfolio in real assets. Yeah. And real assets are equities, is real estate. It can be private equity, because that is indirectly you invest in companies. It can be infrastructure. That is where you want to have your high exposure. You need to have always a buffer of cash or cash equivalent, and you can put that into fixed income. There's different forms and shapes of fixed income, so that you can actually do rebalancing of your portfolio and allocate more money to some of the strategies you've done maybe less well. So you do need let's call it a fixed income / cash buffer, but that depends very much on your risk profile. And then there's different ways of executing your equity strategy. You can execute it through either indexing, which is what I would strongly suggest, maybe with some specific stocks that you particularly like, but that is always very difficult because it's like a bit like gambling. And fact is that over the last 30 years, most active managers have not been able to beat the market and certainly not the index. And then you want to allocate a part of, into private equity. If you allocate to hedge funds, well, it's a form of investing into equities or the capital markets. It's just executing differently. It's not indexing it, but it's managing it actively with a view to have absolute return, so not lose money, which is very much what you want to do with your capital. And then, of course, there's a lot of variations on, what private equity is. It can be, real estate for me is also an illiquid / private investment, or you can go for very large foundations, infrastructure. Usually, I would not recommend for private people to invest in infrastructure because these are very long-term investments, and we talk about 15 to 20 years.
Yeah.
So that is, how I would, allocate the money in my portfolio today.
Very nice. Thank you, Eric. Amazing. Any final thoughts for the audience today, be it about entrepreneurialism, building a business, anything specific that you would like to leave as a final thought with our guests?
Well, to maybe come back to your question of legacy and why I think I put so much emphasis on culture. I think if you have the right culture in a business, no matter what the culture is, some people might like it, and some people might not like it. It might suit some people, or it might not suit some people. But if you have a very strong culture in a business, that is really what drives the business. And it's not for nothing that people say that culture eats strategy for breakfast.
Yeah, driving the business forward with passion and intensity, I think, is certainly part of the Syz culture.
We try very hard every day.
Excellent. Thank you, Eric.
It's a pleasure. Thank you, Richard.